Welcome. If you're new to crypto investing or looking to rebuild your portfolio from scratch, you're in the right place. Building a crypto portfolio can seem overwhelming, but with the right approach, you can set yourself up for long-term success. In this video, I'll walk you through my step-by-step process from setting goals to choosing assets and managing risk. Whether you have a small budget or are ready to invest more, these principles will help you make informed decisions. Let's start by understanding what a crypto portfolio is and why it matters. Crypto portfolio is simply a collection of different cryptocurrencies that you own. Just like a traditional investment portfolio, it's designed to spread risk and increase your chances of success. Instead of putting all your money into one coin, you diversify across several assets. This way, if one coin drops in value, others might balance things out. The key is to choose a mix that matches your goals and risk tolerance. Next, let's talk about setting those goals before you start buying. Before you invest a single dollar, it's important to define your goals. Are you looking for quick profits or are you in it for the long haul? Maybe you want to save for a big purchase or simply learn about blockchain technology. Your goals will shape your entire strategy, from which coins you pick to how much risk you're willing to take. Take a moment to write down your objectives and keep them in mind as we move forward. Risk tolerance is all about how much volatility you can handle. Crypto markets are known for their wild swings, so it's crucial to be honest with yourself. If you lose sleep over price drops, you might want a more conservative approach. On the other hand, if you're comfortable with ups and downs, you can take on more risk. Assessing your risk tolerance will help you decide how to allocate your funds and which assets to choose. Next, decide how much money you're willing to invest. Only use funds you can afford to lose, since crypto is highly speculative. Set a budget that won't impact your daily life if things go south. You can always start small and add more over time as you gain confidence. Remember, consistency is more important than size when you're just starting out. Buy crypto, you'll need to use a cryptocurrency exchange. Look for one that's reputable, secure, and easy to use. Check for features like two-factor authentication, a wide selection of coins, and reasonable fees. Some popular options include Coinbase, Binance, and Kraken. Make sure the exchange is available in your country and supports your preferred payment methods. After choosing an exchange, it's time to set up a crypto wallet. Wallets store your coins securely and come in different types: hardware, software, and even paper wallets. Hardware wallets like Ledger or Trezor offer the highest security, while software wallets are more convenient for beginners. Always keep your private keys safe and never share them with anyone. Bitcoin is the original cryptocurrency and often considered the safest bet in the market. It's widely accepted, has the largest market cap, and is seen as digital gold. Many investors allocate a significant portion of their portfolio to Bitcoin for stability. While it's still volatile, it tends to be less risky than smaller coins. Let's see how Bitcoin fits into your portfolio. Common strategy is to allocate 40–60% of your portfolio to Bitcoin. This provides a strong foundation and helps balance out riskier assets. If you're more conservative, you might go even higher. The idea is to have a solid core that can weather market storms while still leaving room for growth from other coins. Ethereum is the second largest cryptocurrency and powers a huge ecosystem of decentralized apps. It's more than just a currency, it's a platform for innovation. Many investors allocate 20–30% of their portfolio to Ethereum. It's riskier than Bitcoin but offers more upside due to its technology and active development. Consider putting 20–30% of your portfolio into Ethereum. This gives you exposure to the broader crypto ecosystem and the potential for higher returns. Ethereum's smart contracts and DeFi projects make it a key player in the space. As always, adjust your allocation based on your risk tolerance and goals. Altcoins are any cryptocurrencies other than Bitcoin and Ethereum. They can offer high rewards but also come with higher risks. Examples include Solana, Cardano, and Avalanche. Allocating 10–20% of your portfolio to a few promising altcoins can boost your returns, but be sure to research each project thoroughly before investing. When picking altcoins, look for strong teams, real-world use cases, and active communities. Check the project's whitepaper, roadmap, and recent news. Avoid coins that promise quick riches or lack transparency. Diversify among a few altcoins rather than putting all your eggs in one basket. This helps manage risk while still capturing potential upside. Stablecoins are cryptocurrencies pegged to stable assets like the US dollar. They help protect your portfolio from volatility and can be used to park funds during uncertain times. Consider keeping 5–10% of your portfolio in stablecoins like USDT or USDC. This gives you flexibility and a buffer against market swings. Crypto prices can change quickly, so it's important to rebalance your portfolio regularly. This means adjusting your holdings to maintain your target allocations. For example, if Bitcoin grows and becomes too large a portion, you might sell some to buy more Ethereum or altcoins. Rebalancing helps you lock in gains and manage risk over time. Use portfolio tracking apps to monitor your investments. Tools like CoinGecko, Porttfolio, or Delta let you see your holdings, track performance, and get alerts. Staying organized helps you make better decisions and spot trends early. Make it a habit to review your portfolio at least once a week. FOMO, or fear of missing out, can lead to impulsive decisions. Crypto markets move fast and it's easy to get caught up in hype. Stick to your plan and avoid chasing pumps. Remember, slow and steady wins the race. Emotional investing often leads to losses, so keep a cool head and trust your strategy. Security is crucial in crypto. Always use strong, unique passwords and enable two-factor authentication on your accounts. Be wary of phishing scams and never share your private keys. Consider using a hardware wallet for large amounts. Taking these steps can protect your assets from theft and loss. The crypto world evolves quickly, so continuous learning is key. Follow reputable news sources, join online communities, and stay updated on new projects. The more you know, the better your decisions will be. Treat every investment as a learning opportunity and don't be afraid to ask questions or seek advice. Crypto investing can be an emotional roller coaster. Prices can soar or crash in minutes. It's important to manage your emotions and avoid panic selling or greedy buying. Set rules for yourself like stop-loss orders or profit targets to help you stay disciplined. Remember, your mindset is just as important as your strategy. Many beginners make the same mistakes like investing too much in one coin, ignoring fees, or falling for scams. Learn from others' experiences and avoid these pitfalls. Diversify your holdings, double-check transactions, and always do your own research. Mistakes are part of the journey, but you can minimize them with careful planning. Crypto can deliver big gains, but it's not a get-rich-quick scheme. Set realistic expectations and be patient. Focus on long-term growth rather than short-term profits. Remember, even the best investors face losses sometimes. Stay committed to your plan and don't let short-term setbacks derail your progress. Don't forget about taxes. Crypto transactions can be taxable events depending on your country's laws. Keep records of your trades, profits, and losses. Consider consulting a tax professional to make sure you're compliant. Staying organized with your taxes can save you headaches down the road. Dollar cost averaging is a strategy where you invest a fixed amount at regular intervals, regardless of price. This helps reduce the impact of volatility and removes the pressure of timing the market. Over time, you'll buy more when prices are low and less when they're high. It's a great way to build your portfolio steadily. Decentralized finance, or DeFi, offers new ways to earn with your crypto. You can lend, borrow, or provide liquidity to earn interest or rewards. While DeFi can boost your returns, it also comes with extra risks like smart contract bugs or hacks. Start small, do your research, and never invest more than you can afford to lose. Non-fungible tokens, or NFTs, are unique digital assets that have exploded in popularity. While they can be exciting, they're also highly speculative. If you're interested, consider allocating a small portion of your portfolio to NFTs or other emerging assets. Always research thoroughly and understand the risks involved. Crypto is full of opportunities but also scams. Be cautious of offers that sound too good to be true and never send money to strangers. Double-check URLs, use official apps, and avoid sharing sensitive information. Staying vigilant is your best defense against fraud. Most successful crypto investors think long-term. Focus on building a portfolio that can grow over years, not just weeks or months. Stay patient, keep learning, and adapt as the market evolves. Remember, it's a marathon, not a sprint. Your future self will thank you for the discipline and effort you put in today. Regularly review your portfolio and progress toward your goals. Celebrate your wins, learn from your mistakes, and make adjustments as needed. Investing is a journey, and every step teaches you something new. Stay focused on your objectives and keep moving forward one decision at a time. Building a crypto portfolio from scratch is both exciting and challenging. By setting clear goals, managing risk, and staying disciplined, you can navigate the ups and downs of the market. Remember to keep learning, stay safe, and invest only what you can afford to lose. With patience and a solid plan, you'll be well on your way to building a successful crypto portfolio.